This is the Bank Nifty daily charts. As you can see, a massive green candle formed for today. Market has rallied over 800 odd points to form this big candle of today, confirmation of yesterday's engulfing candle. Let me take you to how the day actually went for us. So yesterday the market closed at 36,852 and opened up almost 100 points higher at 36,946. And essentially we had this zone here which was taken out in the first hour or so of trading. Then yesterday we had a slightly negative delta. So the first things in the morning we wanted to do was move the calls that we had sold out of the way, move the puts ahead so that we can sort of try and neutralize our delta. And to be honest, we thought that this zone around here, the 37,300 odd levels, might hold, but it broke all levels and essentially closed close to all times highs. So that was something that caught us on the back foot. But overall, this is kind of how the day went. It started at 702 straddle, closed yesterday at 717. We moved our calls out, we moved our puts ahead. Um, and one of the things that we noticed in the open interest around 11 o'clock or so, which is around this candle, was open interest in the call side was 37,500 and 37,300. Market is at 37,300, and on the put side everything was written around 37,000. So we were definitely feeling that it might be between 37 and 37,300 odd levels. But again, this is euphoric moments. Nifty was also starting to trade higher, and the trickle down effects of both of them moving forward had this momentum uprise. And essentially, what we ended up doing was around 12:30 decided to start calling it quits because it was a difficult day for us. We had booked in some profit a couple of days earlier, and if we kept on holding our positions to try and prove our point right that the market will turn, it has to correct, we would have lost even more money. So today was, even though it was fantastic for the market, was not a great day for us. We didn't end in profit. We closed positions slightly on the negative. The upside is we've had these days before, and we learned our lesson. A couple of learnings for the week was one, around Tuesday when the market was come down, we had hit, I think, 700 odd straddle prices, and it didn't make sense to kind of fight this through because we know Friday straddles will typically open around 650, so there was not much DK. We booked in some profit, but in some accounts we couldn't sort of build on that profit. Again, something that we got to learn from. And another thing that we were looking back and learning was when IVs are so low at 15 odd, it really doesn't make sense for us to sell. It just makes sense for us to buy. There is a clear cut momentum, and to ride this momentum. Maybe not sell in times like that, but maybe we'll change our strategy to buy things for the Bank Nifty. But coming to tomorrow, where we don't have any resistance, this resistance zone is broken, and this resistance zone is also broken. So our plan for tomorrow is essentially wait. Let's see what the first 15, 20, 40 minutes of trading does the 20 odd levels hold up. If it holds and the market starts coming down, maybe it'll be range bound. But other than that, our objective for tomorrow is to kind of play, wait and watch, see what positions actually open. If it starts breaking this and starts heading towards 38,000, maybe it's a time for us to buy some options and not sell. But again, tomorrow's plan is completely fluid. We've got support zones coming in at this level, this level also for sure. So we've got all of these support zones kicking in. Our objective is to try and figure out at what point does the market hold. So I would think this 35,700 odd level might be interesting to see. If it kind of takes some support from here and starts bouncing up, maybe it's a time to kind of ride the trend. Otherwise, if it starts breaking down, then we gotta wait for some resistance to form in order to take some trades, so that we can play the next week and plan so that we can end next week in profit.